In this video, we will use price action rules to help us identify high probability setups and to navigate price charts. As a price action trader, my goal is to first identify the market structure, which is a trend range, and then I need to follow price action rules, the trend line rule, which says that right now the trend is bearish. Overshoot can break the trend line or lead to reversal, and reversal indeed happens. So you have new low, and we have first attempt by the sellers to resume the bearish trend down, but it is not high probability setup. We're about to have second entry short. There's going to be break below this bearish bar, but I have to respect the uptrend working higher. I have to respect the correction, so I cannot go short just yet. There was no break below this bar anyway, but I still need to respect the short-term uptrend. There's a small break new high. We're back below EMA, so right now if I expect for this downtrend to get a new extreme, I want to see EMA acting as a resistance, and I want to see a lower high, preferably felt second entry long. That didn't happen, and we're back above the EMA. So right now I have to question the bearish analysis. Why are we back above the EMA? That is not something that is supposed to happen if we're gonna get the new low. However, this is nothing unusual. There can be just a stronger correction. I'm not gonna be selling, but we can still get the new extreme tested. So I'm just gonna wait for price action to correct a little bit more. You can see how EMA flattened, and we have congestion. So what I'm gonna mark my key levels, congestion, consolidation, EMA flat. A lot of bars stacked right next to each other, no clear buy. So this is a no trade zone. I'm not even analyzing candles here, not looking for setups, because this is a no trade zone, horrible congestion. I'm gonna see what the price action does, if we're gonna get a successful breakout, and price action pull back into this trend range, and this is concerning. Now I will have to question the bearish bias, because this is not something that is supposed to happen. This breakout is supposed to be successful and lead to a new extreme. We pushed back into trend range. So this means the trend range took over this downtrend. So if I'm going to analyze closely this trend down, I can see there's a very tiny break and move to a new extreme. Now break like this is a lot of times, most of the time, not significant enough, but today this ended up being the right break, move to a new extreme. I'm no longer expecting new low. I'm adapting to this consolidation right here because we're going too long sideways and we're back above the trend range and the support keeps holding. So right now what I'm going to do, I can see series of high highs and high lows. I'm going to mark my uptrend because remember, every single candle you see on the chart is part of some pattern, either the channel or the trend range, but there's always a reason to price movement. So as a trader, you know that you must look for these important patterns. You have a small overshoot, new high for a century long, and we have a second entry long at the EMA. Now the reason why we're focusing on the second entry long is because this uptrend needs to get new extreme tested according to trend line rule. However, the second entry long is an inside bar, which we don't really like inside bars. You can see the bullish bar is inside of the previous bar, and we had small overshoot, so we can have stronger pullback. For this reason, we prefer to get high-low confirmation setup, but high-low is not really the EMA, not even the tail is touching it, which is not good. We need to see price action pull back close to the EMA, so we cannot take the high-low as well. An uptrend played out with the break and move to a new extreme. Now, how is this information helpful to me that we have a break and new extreme? Well, first of all, let's analyze the big pattern. What does the big pattern tell me? This is a trend range. This is not a trending market. For this reason, I'm not going to look for broader uptrend like this, because these broad channels across the entire trend range are not valid. Okay, this is a one leg up, broad sideways pullback, second leg up. So you're better off following these shortened channels, shortened patterns, and expecting price action to pivot. So once we have a break in new high, we expect depletion of bullish momentum. We're no longer expecting this uptrend to continue working hard, and in fact we can take the other side of their orders because the late bulls are going to be buying at the top of the trend range after there's a break and new extreme. And for this reason, you can see you have a new high, first entry long, second entry long failure, small triple test, great failed second entry long, uptrend played out with the break new extreme. You're selling at the high today. This is a great high probability setup, failed second entry long, triple test, great signal bar, market push lower. So I'm going to redraw short and downtrend working lower. You have a new low, first entry short. Pull back, we have a second entry short, which is also matching high scan reset. First entry long, pull back, second entry long first. So we have double high probability setup. Second entry short and a failed second entry long, but the signal bar once again bearish, so you need to use double bar entry, which is not that bad because the low of the bearish bar is close to the low of the previous bar. Your stop loss still needs to go one tick above the entire swing, the original signal bar, but because it is quite big and you have to use double bar entry, I have to mark it slightly more aggressive. And by the time I get a lower high, it is too far from the EMA with the body, it is too close to these lows, so you need to be waiting. We had a failed second entry long again, but it is a horrible bullish bar. I cannot sell below bull bar, and the follow-up bar is so big the scalp was almost made, so I'm not really gonna be taking that because it is a horrible bar. Now market keeps trending back into trend range, which is as expected following the range rules. Okay, for this reason you always must identify the main structure, the main bias, because it helps you anticipate what's gonna happen. You don't need no indicators, no volume profile, MACD, stochastic, RSI, none of this. Price action tells you everything you need to know. At first I was trying to look for something like this, but this is too big, too broad. It has possible overshoot, no confirmations here. But the second thing I'm gonna do, I'm gonna look that there is a consolidation sideways price action. This was really the move where the downtrend started, the breakout lower. So what I'm gonna do, I'm gonna redraw the shortened channel, something like this, because it fits overall better. But if I'm not sure, I want to see reaction of the EMA to price action. Okay, we have a new low, first entry short, second entry short. We have a second entry short, but we have uptrend working higher, and it's not full at the EMA, so I cannot take this second entry short just yet. But this downtrend needs to get new extreme according to trendline rule, so I expect new low. So I want to see either lower high or double trap, and now we have, whoops, lower high confirmation setup of this second entry short. It is right at the EMA, close out tight, attempt to create new extreme, EMA held once, twice, great signal bar. This is textbook high probability setup because it is a confirmation setup of the second entry short, attempt to get new high, EMA keeps holding, the downtrend needs to get new extreme, perfect high probability setup. Market created a break, move to new extreme. So right now we can expect some stronger pullback above EMA, but price action remains trending lower. And we're below EMA. Why are we not reversing after breaking new extreme? There's a possibility. Okay, we're breaking lower again. So right now I can see EMA keeps projecting series of low highs and low lows. So we can see we have additional pattern developed, spike down and a channel pattern, because you can see it aligns with the EMA, and you can use the market geometry. You can see how nicely the candles fit inside this channel. You can see series of low highs and low lows. Micro double bottom can reset. We have a new low, first entry short, second entry short, which is also visual, first entry short, second entry short, kind of a visual to like a pullback. We have a double top. The signal bar is not fully bearish, however, you can see quite a tail at the top, very close to being easy high probability setup, but the signal bar is the last worry here because there's some tail at the bottom, but it's a decent high probability setup because the downtrend needs to get new extreme, double top, you're at the EMA, broad to like a pullback, and technical new extreme. So this is a second entry short. There was no lower high confirmation setup, and now even the spike and the channel had a break in new extreme. Now there was another rejection of the EMA, so what I did watching this live, I even widened the spike and the channel because it still fits pretty well, but as you can see, price action completely reversed, retraced too much, so I adapted back to this tighter one, break, two-legged pullback, and now we have reversal. Now if I'm going to draw the first leg, I can see we already have a small break new high, but we keep trending higher. Why do we keep trending higher? So I'm going to widen it, let's say something like this, but we still keep trending higher, and this channel doesn't fit well. There's an empty room here, an empty room here, so this means there is a big spike. We have a channel working hard like this, spike and a channel pattern. We have a new high, first entry long, and we only have first entry long, so I cannot take first entry long. By the time we get a second entry long, it is below EMA, inside bar, you cannot go long below EMA. Can we get high-low confirmation setup? And now we have high-low confirmation setup of the second entry long below EMA, great signal bar, but because the downtrend doesn't fully have new extreme and there can be second leg down, it is more aggressive. Now I took a chance here with the deeper limit order. It ended up being a losing trade, but chances were high that we're going to get new high, but also chances were high that we're going to get the new extreme. So you have to understand the fact that it didn't fully play out, so you're taking a little bit more risk, but trading is about taking a chance. So no problem if you took a chance here. Break a new extreme. Market pushed above EMA. Okay, we're about to get a new high for the spike in the channel. A new high was created because you can see we reached the high that is higher than the latest highest high inside of this channel. So I'm gonna mark, break, move to a new extreme. Market keeps breaking lower and EMA is flattening. In fact, EMA flattened a lot while we were attempting to get a break in new extreme. Now, this means, as you already probably know, because you're already a skilled price action trader and you have to still use the same habits every single day. It is pretty much a routine that you follow. You see flat EMA, you see consistent price swings up and down, so you try to predict some key level, okay? Because we're using price action rules, we evolve from trending market, shortened trend, break a new high, into consolidation because EMA is flattening and we have consistent price swings up and down, up and down. We have a failed second entry long, which is a shame that it didn't form below the EMA. Actually, it is quite close to the key level, but it's not even fully touching the key level. As you can see, it is just hanging here. I don't think we can take it just yet. We wanted to see it closer to the key level. So as price action traders right now, we have to apply the trading range rules because we are right now in a brand new trading range, which means we have to buy low, sell high. So we have to time the entry correctly. And how we're going to time the entry correctly? Well, we're going to follow, of course, the shortened trend line rule, which we have break and a new extreme. Okay, so the bearish momentum played out. And what I can also do is I can also look for the two-leg pullback. We have one leg down, break, second leg down. We have new high, first entry long, pullback, second entry long. We have a second entry long, which is also triple test at the support. One bounce, second bounce, third bounce. This is a great high probability setup, perfect textbook price action because you're buying low, downtrend played out, flat EMA, proven support, triple test, great signal bar. You have to buy low according to price action rules. We have a high-low confirmation here, but problem is this high-low is not fully above EMA. It is right into it and it's not fully at the support. I prefer these high-lows to be above EMA or close to the support. Now, it still worked regardless. You can see great significant move, but I don't think, it is that safe of entry because it is not the key level and it's not fully above the EMA. It is more aggressive for this reason, so I'm going to mark it a little bit more aggressive. We're going to draw short-term uptrend working higher, something like this. Okay, downtrend right now established as well, but this uptrend needs to get new high. So you need two new extremes, which is confusion, flat EMA. You are right now in the middle of this trend range, which you want to avoid taking setups like these. EMA exactly in one of these bars. You're not at the key level. You prefer to be buying low, selling high. Uptrend played out with the break, move to a new extreme. And as a price action trader, price action moves in pairs of twos. First leg up, break, second leg up. Visual like this, and this is a well breakout because most breakouts are the trend ranges, and this is a very healthy trend range. No imbalance, completely flat, confirmed key levels. However, you have to use double bar entry. It is quite big, so for this reason it is more aggressive, but this is a great fail breakout. Can get lower high confirmation setup, no lower high, but I have to redraw, shorten downtrend working lower. Remember, yes, we're bouncing at the support, but I cannot go long just yet because I need to follow the trend line rule. Okay, every single time I can only pivot at the extreme once I can see break a new extreme. Okay, so you have a break, I cannot go long just yet, move to a new extreme, perfect. So the downtrend played out. Okay, right now we have a push back above the EMA, new low, first entry short, high low. You can consider not a bad high low. It's confirming the failed breakout in a trend range pattern, but this push down was quite strong. Can you get a failed second entry short above EMA? And we have new low, first entry short pullback, failed second entry short above EMA. This is a failed second entry short. You're back into a trend range. EMA keeps holding, and if you're going to draw channel working higher, you are of two key entry points. So this is a great failed second entry short high probability setup. Oh yeah, I can see that the market is about to close and it's too late. So this is the overall structure for today, and you can see you have to apply different rules for different structure. Number one, locate the main overall pattern. Then look for the trending structures inside of the big trending range, but there can be also a small trending range part of the main one, which means you need to apply trending range rules. You can see buy low, sell high, the small trending range, buy low, sell high, the big trending range, and meanwhile try to be looking for new extremes with the trend that is currently in play. I hope you had a good trading day. I'm gonna wrap it up, and I'm gonna talk to you next time. Good luck with your trading.